The largest investment manager in the world, BlackRock, is becoming a more significant Wall Street force in Washington, D.C. Over the years, the company has brought in a number of well-known policymakers, and at least 3 of those with the New York-based asset management on their resume currently have significant positions in President Joe Biden's cabinet. What if I told you that BlackRock, a single firm, has a significant influence on every single company you just engage with in the day? BlackRock is an investment firm that owns a sizable portion of stock in some of the biggest corporations globally. Their global asset holdings amount to $10 trillion. Such a large corporation may be easily thrown away to be pure evil. However, BlackRock doesn't actually own these businesses or even own stock in them. Shares are owned by its clients. All BlackRock does is control them. Do you think that BlackRock doesn't have any impact on those companies? They undoubtedly have. It is most likely that firms don't withdraw their investments because they want to stay in BlackRock's favorable conditions as they control such a large portion of their stock. Let's take a look at its modest beginning. It was 34 years ago that Larry Fink launched BlackRock. In just 5 years, he increased the company's worth from $5 million to $8 billion, mostly from managing the investments of major institutions like pension funds, university endowments, as well as large amounts of money made by extremely wealthy people. Today, Fink commands the attention of corporate moguls and world leaders in politics as a member of the World Economic Forum and the Council on Foreign Relations. For BlackRock, the 2008 financial crisis appeared to be an excellent opportunity. It obtained an unchallenged confrontation to take control of a large number of the failed banks. That increased the influence of the already enormously wealthy Larry Fink. The same scenario occurred in 2020 when BlackRock was brought in by the government to shield the Federal Reserve from financial losses in the early stages of the pandemic. Gaining power. These kinds of unstable economic times were crucial to BlackRock's journey to the top. Amidst global outrage following George Floyd's death in 2020, BlackRock released a statement claiming that businesses needed to fulfill social responsibility and that they would be awarding an ESG, which stands for Environmental, Social, and Governance, score to each company. Businesses that agreed to increase diversity in leadership and recruiting, or that provided eco-friendly technologies and regulations, were able to score higher. Despite the fact that this concept has been existing since 2004, BlackRock emerged in 2020 as the most prominent promoter for ESG investing. To be completely honest, the project was successful. But remember, as everyone knows, the world in which we live is far from perfect. Although there has been some progress in the right direction, the main effect of BlackRock's ESG statement has been a sharp increase in the number of businesses engaging in greenwashing, which is committing the act of making false claims about how sustainable, diversified, or responsible they are. It has also revealed BlackRock's own hypocrisy. In spite of its claims to be an advocate for ESG investing, the corporation continues to be the world's biggest supporter of fossil fuels, profits from conflict, and maintains friendly connections with groups that violate human rights, encouraging ESG investing, but not willing to give up on oil and gas investments or divest from businesses that have unclear human rights policies. Although their actions appear to be beneficial to the public, they are hesitant to manipulate their investments in the background, even when doing so would benefit society as a whole. Consider the changing climate. Climate risk is investment risk, according to BlackRock, which means it's dangerous to invest in businesses that aren't developing strategies to combat climate change. BlackRock really took action in 2021 by aiding in a board shakeup at ExxonMobil and appointing new directors who made climate change action commitments. Previously, the massive oil and gas company was accountable for 2% of global emissions. In order to assist in lessening that over time, new self-imposed mandates have been implemented. Without question, the corporation made a tremendous move with this. However, this seems more like morality signaling than a real attempt to effect real change, given that it remains the world's largest investor in fossil fuels. There is still more hypocrisy to come. BlackRock has spoken out against gun violence and stated that gun manufacturers should do more to safeguard American lives as mass shootings continue to claim lives in the country. But do you know who is the biggest investor in the gun industry? Yes, it is Rock Black. Although BlackRock claims to have conversations with these corporations about enhancing safety, it's unclear if any real policy changes have occurred so far. Opponents question what BlackRock promised Chinese President Xi Jinping in exchange for thinks access to the finances of the Chinese Communist Party, given that BlackRock is now formally the first international asset management with access to China's mutual fund market. To be honest, there are other investment firms wishing to work with China besides BlackRock. Surprisingly, especially for an American corporation, it has managed to establish the strongest foothold in the disputed area due to its broad influence. It is now a key role in the conflict in Ukraine as a result of this power. Here comes the main question. How did one company get this much power and influence globally? It all began, of course, with technology. The foundation of BlackRock's operations is exchange-traded funds, or ETFs. Diversified investments are included in an ETF to lower investor risk. Investing in a fund that purchases stocks, commodities, and other securities is a more advantageous option than purchasing stock in a specific company. Thanks to a portfolio management program it developed in 1998 called Aladdin, BlackRock and its investors were able to profit handsomely from this strategy. All investments are forecasted by Aladdin, who also gathers personal information from anybody who has ever intentionally or unknowingly given BlackRock money. In the end, this technology elevated Think and BlackRock to the top, solidifying their position as the industry leader in ETF investing, a growingly popular market. BlackRock currently manages assets valued at 10% of the global GDP. Companies such as Disney, Comcast, and Fox, large investment firms such as Vanguard and BlackRock, hold the largest stakes in global giants such as Google, Facebook, and Amazon. Vanguard and BlackRock are two of the top 5 shareholders of the 3 main airline companies. However, governments could implement measures to prevent these corporations from gaining so much power, even in cases when an investment firm's influence is meant to be positive, such as in the ESG. Laws may be imposed restricting the amount of power the firm can have on the companies in which it invests. Thank you for being to the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Let's meet again with another interesting video.